Hello everyone, this is Brian Castle, CEO of FourStar Wealth with the FourStar update for April. So the economy has slowed markedly. We hosted yesterday, Tuesday the 24th, a meeting with key officials from the Federal Reserve here in Chicago and the Atlanta Federal Reserve, and they confirmed with us that if the quarter ended today, it'll end at the end of the week or next Tuesday, but if it ended today, the gross domestic product would only be up 0.3% less than 1%. So that's markedly different than the goal of a 3% GDP growth. So if we do end the quarter somewhere below 1%, it's going to be reasonably hard to get to a full year number of 3%, unless we have some outrageously good quarters in the second, third, and fourth quarter. So the economy will probably not achieve, hopefully we're wrong, but will probably not achieve the 3% growth that we had hoped for. It's likely kind of 2 to 2.5%. Some good news is that the job growth is getting better. The unemployment numbers are back in the mid-5s, which is an appropriate number for a growing economy. They consider the 5% to be full employment. However, the U6 unemployment number, which is all the people who are underemployed, is still persistently high. There's normally a gap of 4% between the two unemployment numbers, the U3, which is what we are told is the normal employment number, and then the number U6. So it's normally about 4%, it's about 5.5%, so that extra 1.5% of gap between those employment numbers, many people think is because of the effects of Obamacare or just the effects of employment changes in the economy where employers are not willing to employ people full-time, because the full unemployment numbers include part-timers, and many people consider part-time employment not to really be a full employment, right? So that's still an issue. These are just ideas that we got from our folks in the Federal Reserve, and it was a great meeting, and many of the FourStar clients were very impressed with the words that officials had to say. As we go into April, we realized that the rally in gold in February did fade. And in two of our portfolios, the capital appreciation portfolio and the U.S. sector portfolio, precious metals as a sector was removed from those portfolios. And in both of those portfolios, a consumer sector came in, namely the restaurant stocks. So the restaurant stocks and a restaurant stock ETF in the U.S. sector portfolio have come into those models, and that shows strength in those areas. And gold rallied and then faded. Also, we talked about international stocks starting to finally show some growth. There's a wide gap in valuation between U.S. stocks and international stocks. At some point, that gap will be narrowed, either by U.S. stocks fading or international stocks growing, or some combination of the two. We're starting to see international stocks grow, but U.S. stocks are still growing at the same time. So the gap is still wide. We'll see how that plays out, but we're seeing growth in international now. In one of our rotation models, international stocks have now appeared in that model and are acting pretty well. On a housekeeping note, we are starting to send emails to all of our clients based on those moves. So everyone who has the capital appreciation account and the U.S. sector account, they've got an email this month explaining what went on. We do a recap of the objective of the portfolio and then a paragraph describing the changes that were made in the portfolio that month. So we'll do that with every portfolio that we run. And if folks have any questions, they can certainly call, but it'll be a little bit more informative in our effort to keep people informed. For April, we expect now our first look at GDP numbers for the first quarter. The April numbers will be a good guide to the Fed to see whether they're actually going to do that interest rate increase that has been much talked about for June. In our discussions with the Federal Reserve officials yesterday, they're still unsure as to whether that's going to happen. You read it in the papers that everyone's absolutely certain the Fed's going to raise interest rates, but talking directly to Fed officials, they are uncertain whether they're actually going to do it, and it's a month-by-month decision. So if they see enough strength in the economy, they'll raise interest rates in June, but it may slip into September, and some are saying it may slip into the following year. But eventually, the strength in the economy will be recognized to the point that interest rates need to go up. So again, stay tuned on that. Those are our comments for April. We'll see how the second quarter plays out, and we'll have numbers on the first quarter sometime late April by the time we report for next month. So thanks and have a good morning.